Most people enter trading believing it's about intelligence. They think if they learn enough strategies, indicators, or patterns, the money will come. But the market doesn't reward intelligence the way school does. It rewards emotional control, patience, and the ability to stay calm when everything inside you wants to react. This is why so many smart people lose money, and why some average thinkers quietly survive and grow. Trading is not a test of how smart you are. It is a test of who you become under pressure. The charts don't care about your confidence, your dreams, or your need to be right. Every trade exposes your fears, your ego, and your relationship with uncertainty. And most people are not prepared for that reality. Nobody tells you that trading will magnify your personality. If you are impatient, trading will make you reckless. If you are emotional, trading will drain you. If you seek validation, the market will humble you repeatedly. Trading doesn't change you, it reveals you. The first mindset shift most traders never make is understanding that trading is a probability game, not a prediction game. You are not here to be right. You are here to manage risk. The moment you try to prove something to the market is the moment you start losing control. Professionals don't ask, will this trade win? They ask, if this trade loses, how much does it cost me? Losing trades are not mistakes. They are business expenses. Every profitable trader you admire has lost more trades than you can imagine. The difference is not that they avoid losses, but that they accept them without emotional damage. They don't negotiate with the market. They don't revenge trade. They simply execute and move on. Most traders are emotionally attached to single trades. They celebrate wins too much and suffer losses too deeply. This is dangerous thinking. One trade means nothing. Even 10 trades mean very little. Trading only makes sense when you think in series, over dozens or hundreds of executions. Emotional reactions come from zooming in too close. Another truth nobody teaches is that boredom is a sign of discipline. If trading excites you, you are probably gambling. Real trading feels repetitive, slow, and often uneventful. Professionals wait far more than they act. They are comfortable doing nothing because they understand that patience is a position. The market punishes urgency. When you feel like you need to trade, you are already compromised. The best trades come from clarity, not desperation. They come when you are indifferent to outcome and focused on process. This level of calm cannot be learned from indicators. It is built through experience and self-awareness. Ego is one of the most expensive things a trader can carry. The need to be right, to prove intelligence, or to recover losses quickly destroys accounts faster than bad strategies. The market does not care who you are. It does not remember your last win or your last loss. Every trade is independent, and your ego is irrelevant. Many traders confuse confidence with control. Confidence without rules is arrogance. Control comes from knowing exactly how much you are willing to lose before you enter a trade. It comes from accepting uncertainty without emotional resistance. True confidence is quiet. It doesn't need validation. Risk management is not about avoiding losses. It is about surviving them. If you cannot survive a losing streak, you do not belong in the market yet. Professionals design their systems around worst-case scenarios, not best-case fantasies. They plan for failure first. Another mindset shift is understanding that the market owes you nothing, not consistency, not fairness, not opportunity. Every day you are allowed to participate is a privilege, not a guarantee. The moment you feel entitled to profits, you lose perspective. Overtrading is rarely about strategy. It is about emotion, boredom, fear of missing out, the desire to feel productive. The market rewards restraint, not activity. Doing less, but doing it well, separates amateurs from professionals. Most traders are obsessed with entries. Professionals are obsessed with exits. Knowing when to accept a loss or take profit without hesitation is more important than finding the perfect setup. Indecision at exits is where emotions do the most damage. There is also a hidden loneliness in trading nobody talks about. You cannot blame a boss. You cannot blame a team. Every decision is yours. This level of responsibility is heavy, and many people are not emotionally prepared for it. The market offers freedom, but demands accountability. Consistency doesn't come from motivation. It comes from routine, from rules followed even on bad days, from showing up the same way whether you feel confident or doubtful. Professionals do not trade based on mood. They trade based on structure. The moment you start measuring your self-worth by your P&L, trading becomes dangerous. Losses feel personal. Wins inflate ego. Both distort judgment. Healthy traders separate identity from results. They focus on execution quality, not money. Time is another misunderstood element. People rush because they underestimate how long mastery takes. Trading is a long game. Accounts are not built in weeks or months. They are built through years of compounding discipline and experience. The market also teaches humility. No strategy works forever. Conditions change. What worked yesterday may fail tomorrow. Adaptability is a mindset, not a technique. The ability to accept that you don't know what will happen next is a strength, not a weakness. Many traders quit right before understanding clicks, not because they lack intelligence, but because they lack emotional endurance. The market tests patience more than skill. It asks, how long can you remain disciplined without immediate reward? Silence is important. The less you talk about your trades, the clearer your thinking becomes. External validation creates pressure. Professionals protect their mental space. They don't seek applause. They seek consistency. Trading teaches delayed gratification better than almost anything else. You do the right thing repeatedly without knowing when the payoff will come. This is uncomfortable for most people, but this discomfort is where growth happens. The market doesn't reward hope. It rewards preparation. Hope is emotional. Preparation is logical. Every trade should be planned before it is placed, not justified after it fails. At some point, every serious trader realizes that the real work is internal. Journaling emotions, studying behavior, noticing patterns in thinking, not just charts. The external market reflects the internal state. The goal is not to eliminate fear. Fear is natural. The goal is to act correctly despite fear. Courage in trading is quiet. It looks like following rules when breaking them feels easier. Eventually, trading becomes less about money and more about mastery. The money is a byproduct. Those who chase money directly rarely keep it. Those who chase process often find profit along the way. The trader mindset nobody teaches you is this: you are not here to win fast. You are here to survive long enough to become consistent. Survival comes before success. The moment you stop trying to beat the market and start trying to understand yourself, trading changes. Not because the market becomes easier, but because you become calmer. And in the end, the traders who last are not the smartest, the fastest, or the most confident. They are the ones who learned how to think correctly under uncertainty and stayed disciplined when emotions tried to take control.